We are back at it again here with another video to invest for tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. All I ask for in return is for you to smash that like button. Tell them when you watch this video, helps out the YouTube channel and lets me know you appreciate the time and effort I put into making these videos. So we're going to talk about the SPY in today's video, what 42 Vision is showing, and how things are looking based off the different articles, and why tomorrow is very important and a pivotal day going into the overall stock market. And today, the SPY pushed up higher, and our SPY bot at 9:40 a.m. sent us out a bull indicator. And from that moment forward, call options went up 180% plus to 200% plus within hours, guys. This is our new release that allows us to have an edge within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now gain access to it as well. The link is down below in the description to the 42 Vision indicator, getting connected to the SPY bot, our QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now join the members using these resources, maximizing in either direction by receiving this clarity and edge over the charts. So here we are with the SPY, and it's been pushing up higher today and since yesterday as well, right? The FOMC meeting was around the end of the day, and you can see into Power Hour how the SPY pushed up higher, things consolidated and continued. Now, we're gonna break down some key levels here in the bigger picture and what 42 Vision is showing. But before we do, I want to share with you guys the home run opportunity I mentioned this morning over at the Discord. We strive for opportunities like these every single day, right? 5 to 10% is a regular day, 10 to 20% is a great day, and 20% plus is a home run. And we're going to break it all down here in today's video. So the home run of the day was spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. And we strive for opportunities like these every single day. So these are the three stocks I mentioned this morning, and every single one of them jumped up 3 to 5%, 5 to 10% plus, but one of them turned out to be a home run, and that was SPRT. We caught this one in the pre-market as it was pushing downwards, and it actually consolidated after the bell and took off from the lowest point to the highest point of 20% plus in a matter of minutes, pulled back down and gave another jump of 10 to 15% plus, and from the low to the highest point of 20% plus once again. If you guys want to know about these stocks early on in the pre-market, check out the link down below in the description to the Discord. We look forward to having you join us, and we strive for opportunities like these every single day. Let's jump into these charts. So the S&P 500 index is pushing up higher here on the 30-minute, and the overall market has pushed up higher with it. Now, yesterday you could see how things started to change quickly after the FOMC meeting, sitting sideways, and then actually started to go higher, found itself right there consolidating with the highs of the day, found support, and continued upwards today. Why is the market pushing up higher? That's what we're going to talk about in today's video and break it all down together. But one thing I do want every single investor to be aware of, okay, and this is my opinion, I could be completely wrong, I could be incorrect about what I'm stating. This is not financial advice, and this is just my perspective alone. Now, I like to focus on charts, and when you zoom out, right, we are still very down from some of the highs of the beginning of the year, and the overall direction is downwards, right? Now, could this be the big recovery? Maybe, right? But we still have a lot of different data points like tomorrow's to focus on, and even going through the next rate hike, which is in a few weeks, and CPI data of the next month, and so forth being released to go ahead and figure out the real direction of what's going on. But volatility, I've said this many times, is going to continue. It's going to be here, and we're going to break it all down in today's video with Ultimate 42 Vision, the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 Vision indicator, getting connected to the SPY bot, our QQQ bot, and our newly released Tesla bot. And we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities, whether stocks are going up or going down. And you can now join the members using these resources to maximize in either direction by receiving the clarity and edge over the charts. So we've been under a bull indicator since this extreme weakness point on 42 vision, right? And we're going to break it all down what this means for those first time viewers and those of you that watch my videos and that are connected to 42 vision are aware that this is what we call the dip area, right? White with red borders. Every single time it hits white with red borders, there tends to be a possible reversal. Some are stronger than others, some are weaker than others, and the strength lies once a bull indicator pops up as well, right? When a bull indicator pops up, there's some strength there. When a bull indicator pops up, there's some strength there, right? That's the whole entire point of what goes on here as an extra layer of confirmation. Now, the rip areas are the bright green, right? And then they shift from bright green back to white with red borders, forms another dip area, and starts the process again. And right now, we are in a rip area, okay? That's what I want to talk about and break down here in today's video, how we're in a rip area and we hit the dip area earlier in the week 2 times from last week to this week. And here we are under a bull indicator on the 30-minute. But why is the stock market rallying even higher? Well, it has to do with the fact that the stock rallies as traders bet on potential FOMC pause in September, okay? This right now is just speculation and based off the statements that the Federal Reserve has made and what the Fed members have stated as well. And they state here how the minutes from yesterday revealed a potential pause of hikes later in the year. So basically, the Fed is possibly going to be very aggressive in the next few meetings and towards the end of the year, try and see how these basis points of interest rates rising can help on the effect of obviously slowing down growth and bringing down inflation, okay? So if it doesn't work and it gets out of hand, that's when things can get really rocky and we could possibly go into what everyone has been actually worried about, how this came out 6 days ago, back on Saturday of this week, okay? Earlier in the week, way before what happened in the FOMC meeting and this headline here. Now, that's how funny and crazy it is to think that the markets change that quick, right? After such a big pullback, now running back up, and all it takes is one data point that looks kind of negative or some aggressive statement from the Fed, and it's going to pull it right back down. This is why I believe volatility will persist and continue, and it's not going anywhere anytime soon. And we're going to talk about key levels to be watching in the bigger picture. Now, we do have this article here, as I shared earlier in the video, talking about the speculation of a pause in rate hikes in September. And I explain the whole theory behind it and what the speculation might be. Now, this does not guarantee that it's going to happen. And if a lot of investors are anticipating this and it doesn't happen, it's going to shake things up. Again, I believe volatility is not going anywhere anytime soon. And then this was Monday, how it states here, S&P 500 price forecast, stock markets continue to look threatened. And if you look at it, the overall market was sitting sideways and found a dip area. If I put here the 1 hour, you could see that it got that dip area right here on the 20th of May. And then things have been reversing since then in the last several days and this week. So from last week to this week so far. So it's very interesting how consolidation has been happening. Today, things took off after the FOMC meeting. And if you look at different articles from last week, 2 weeks ago, they were very negative, very bearish. And then now things are turning around with a different tone. And any article that you read today seems like it's talking about a shift in the bullishness and the bulls, right? Well, when you look at the chart here and we zoom out, we put the 4 hour, you could see that we had just hit the first bull indicator. But this is our first bright green. And the last time this happened, we quickly shifted back to a bear indicator and things lasted for about 2 weeks to the downside. So that's the 4 hour right there. Is it going to be exactly the same like that? No, I'm not guaranteeing that. I'm not stating that. But every single time a bull indicator has popped up, they have been very short-lived, and then they're followed by bear indicators that dominate the chart for several weeks and days. You could see here back to back. Now, this hit a consolidation area here, and it's bounced off of bear territory. This was all down here, 20% down for the year for the overall S&P 500 index and the SPY so far. Now, does this mean that it's over and we're out of the bear territory? No, we can retest it. We can actually break through it. So right now there's a lot of euphoria and a lot of hype and speculation behind what the FOMC meeting has stated, but we still have data points to look at, like the ones going into tomorrow. So what are the ones going into tomorrow? Well, let me go ahead and pull it up, and we're going to look at it together. So when we pull it up here, you could see that these are the data points being released tomorrow, and this is the expectation, and this is what they were prior. If these numbers based off the expectations come in harder than expected, that is going to be a huge impact in some way, shape, or form, whether it's just the pre-market or the whole entire day into the market. Now, if these numbers come out positive, right, especially this one right here, down here at 10 a.m., the consumer sentiment, if this comes out higher, that goes ahead and states how the overall economy is feeling, right? The consumer sentiment out there. If it comes out higher, it may seem like something positive, and that could create a spark in volatility or even sustain the rallies. The other thing as well is personal spending. If that's going down and if it's less than expected, and the PCE prices and the core is less than expected, that is going to be a shock to the markets, and it could actually end this rally pretty quickly, guys. Super important to realize that and be aware of it, or it could actually be the fuel to drive it even further based off the charts. Now, if you pull up the 1 day, we're still under a bear indicator since way up here at 444. And now to talk about some technicals here on some levels I would watch. The first thing is this needs to break back above way up here at 423 to actually have some real strength, and even up towards the 430s. And then if that can actually be turned into support, well, then getting back up where this bear indicator popped up, and that's around 440 plus. Now, that's based off the SPY, not the S&P 500 index. The S&P 500 index, it would be 4,300, and then back up here towards 4,444, or if you want to round it down, 4,400, right? So here we are with the SPY again. I removed the S&P 500 index numbers, and the SPY needs to break through those levels to the upside. Our supports, well, it's the recent lows, 380s and 390s, okay? Those levels are key. If we go ahead and break back below 400, the bears are trying to put pressure again, and all of this data for tomorrow is going to affect this big rally and hype behind these articles talking about the future outlook, right? And speculation of less rate hikes, even though we're going to have a more aggressive Fed or a slightly aggressive Fed in the next several meetings. But everyone's hoping that the aggressiveness is in the middle of the year, and towards the end of the year, things can slow down, hoping that the aggressiveness helps. If it doesn't, they're going to be twice as aggressive, and that's going to be a big shock in the overall markets. And this is why when you zoom out to the 1 week, we have been under a bear indicator since way up here at 458. We hit our first dip area, white with red borders, and I talked about it in the previous video I made earlier this week, how we hit that area, and things are trying to shift back up to a red bar. Does a red bar mean there's strength? No. Even a red bar with green borders doesn't even mean strength, because we need to see a bull indicator pop up on any reversal to cancel out this bear indicator. If not, it'll be another fake out like this one. Things come back up and then they continue back down, and we may retest these lows and break through them. And the last time we hit white with red borders on the 1 week, it was in 2018. In December, we hit it 2 times in a row, and also 2020 of March. In the big crash, we hit it 3 times in a row. So if this tries to come back up and then we retest this level down here, then this is not a crash or correction like the 2018 and 2020. If not, I've compared it based off the 1 week way back to 2007 when things try to come back up, and then we hit it again, came back up, and then it went back down. And then also 2000 to 2003, how we hit it several times, came back up, came back down, hit it again, came back up, came back down until finally bottoming, right? So we're in the middle of a large correction / crash. And I have been saying it since January when we started talking about the bear indicator popping up, and all these last several months, that the volatility is not going anywhere. It's going to continue, and I'm going to continue to watch 42 Vision very closely. And what I really want is for a bull indicator to pop up on the 1 week, because every single time they've popped up, they've lasted in the last 2 times for about a year to a year and a half, almost 2 years. So these bear indicators last for several months. This is one of the longest bear indicators on the 1 week in years that has lasted for more than 3 months, and we're going into 5 and even 6 months so far, going into the end of this month and next month. So it's going to be very important to watch the data points coming out tomorrow. This is super important, and this is what we're watching here with 42 Vision to have an edge within the volatility. And when you zoom on into the 5-minute, this is where the opportunities are made. I mean, yesterday alone, just from these bull indicators to bear indicators, calls went up 100% plus. And on these bear indicators, they usually go down between 30 to 50% plus in the upside of the stock falling or the overall market falling, such as the SPY. And when that bear indicator pops up, they go ahead and pop up 30 to 50% on those put options. And the call options today, they went up over 100% plus to 200% plus. And here we have a little fake out there, and things are shifting again, going back into strength. It's going to be important to break above 407, even 410. If that continues to be rejected, it's going to be very interesting how things are going to react going into tomorrow, and what the data points show, and how things are going to react based off the data going into the pre-market, and then at 10 a.m. when that last data point of consumer sentiment gets released.